Hello, Australia. Welcome to My Millennial Property. I'm Glenn James, and this is
John Pigeon.
And we can't do My Millennial Property without Wellman Finance.
No.
Sean Wellman and the team from Wellman Finance. Sean is a quality mortgage broker. He's worked for many, many years as a broker. He's helped John personally over the years, and he supports this podcast.
He does.
And we just say to anyone, like, we're pro mortgage broker because we believe they give you the most choice and I guess just someone to go into bat for you to help you get through and navigate through the whole mortgage world, because it's a wild world out there.
It is indeed.
So thank you to Wellman and the team, wellmanfinance.com.au/M3 if you're after a mortgage broker.
Yes.
Now, I wanted to chat today, John, about parental guarantees, parental guarantors, potatoes. There's a unique thing in the My Millennial Money community where a lot of people have good incomes and they might be paying high rent where it could be worth them paying the same amount that they're paying in rent as a mortgage, but they can't get that deposit together
Yes.
for whatever reason. So talk to us how a parental guarantor works.
Yeah, so what generally happens is the parents have the asset, or someone close to you has the asset, and they know you very well in most cases, and they're prepared to put their property or their security up as a guarantee to the lender that you're wanting to buy your property with, in the event, or basically to secure the loan, right? So in the event of the risk is all with the guarantor, right? They have their property at risk if you default on your mortgage. So if you're the person buying the property and I'm the parent, I say, right, I'm putting my property up for you, Glenn, to go and buy your property. If you default on the mortgage and go and run off overseas, they'll come and take my home, or I need to pay back the loan that you have left behind.
Yeah, so I wanted to use a practical example for those who are interested about this. So let's use the example, if you don't have a 20% deposit or equity in a property, the bank or lender will likely charge lender's mortgage insurance, LMI, okay? Now, let's use an example. So we'll assume two $500,000 properties. The parents own theirs outright with cash. You want to buy one, you've got a good income, you can service a $500,000 loan, but we need some equity so the bank will lend without paying lender's mortgage insurance. Now, the interesting thing is a lot of people think, well, if I don't pay my mortgage, will it flush my parents down the drain?
Yeah.
But what it would usually happen is, and this is why it's so important to go to a mortgage broker that is dialed in, because some banks will put a lien over the whole property of the parents, or $100,000. They might split out a separate mortgage.
Yeah.
Okay. So the wash up is the reason that the banks want the 20% skin in the game. So if you paid $500,000 for the home, you defaulted on your mortgage and you couldn't pay it. The bank came in and said, we're taking possession and we're selling it. If the bank sold it for $550, awesome. They don't care. They've got their money. Right? But if the bank only sold it for $480, they're getting the 20 grand. They have got legal recourse to get 20 grand from your parents. And I'm sure your parents would try and get 20 grand and just pay them out, or they could technically sell the parents' home in order to get their 20 grand.
Worst case
scenario.
Yeah.
So that's the risk. Now, if you couldn't pay your mortgage and the value dropped to $300,000 of the home, the bank can only get 100 from the parents, and they would still be in the whole 100,000.
Yeah.
Because it's the risk they took.
That's right.
So I think it's important to know, because a lot of people might send this episode to their parents.
Yeah.
Just to unpack it a little bit. If you are a parental guarantor on your children or your son-in-law, daughter-in-law, whatever, the bank would only have I would suggest you get a lender that would only put a lien on your property for the portion that's required to use as security for the one you're buying.
That's right. And a lot of lenders will actually, in the example I gave before, if I'm the parent and you're the child,
Hey.
they will require
daddy.
5% of your own genuine
Yes.
savings funds,
Yes.
and I'll guarantor the remaining 15%, right? Now, a lot of people think that the guarantor's on there for life, and it's very hard to get them off. Well, what essentially needs to happen is the property needs to grow in value by that 15% to then remortgage and have it just as you as the title owner with no guarantor in place, no restrictions, and I've got my my life back. I can sleep at night knowing that you won't default.
Or you have saved an extra 15%,
Paid it down.
and paid the mortgage down. That would then release your parents.
Yeah, so ideally both's happening at the same time, isn't it? You're paying a bit down and hopefully it's going up in value.
But I would not be under any illusion that the parental guarantee is there for only 1 or 2 years.
No.
I think when you're having the discussion with your parents, or with, if you are a parent, you've been approached, that it is more of a longer term play, and there can be, it's not always the case, but if the parents have plans to downsize and move around, you just want to make sure you've got a lender that can move the asset and whatnot.
Yeah, and
if
that's
the parents want to move their house or whatever.
Yeah, and my recommendation would be, in fact, to have a conversation with the parents or the guarantor to say, right, if we're going to do this, I need to know that for the next 5 years minimum, you're not going to want to have to sell your house because all sorts of complications.
Yeah, because some banks will allow the property to be re-securitized or whatever.
Yeah.
Some won't.
Yeah, and there's a whole lot of implications and costs associated. So just be wary of that. And the second part of that would be, regardless of how friendly you are with mum or dad, I would still get a separate agreement drawn up. Even if it's not recommended by mum and dad, it's okay, shake hands, don't worry. I'd still get it drawn up in the event.
Yeah. And there's other strategies as well. Like, I know some lenders out there, if the parents had cash or money aside, they could actually put money, 100 grand, on a term deposit, and the bank would have that term deposit as security. So that's an option. It's also important to note that you might be restricted with some lenders if your parents have still got a mortgage or a portion of a mortgage.
Yes. Yeah.
So again, I think it's just important that, and this is what I would recommend to you, if you are wanting a parental guarantee, float the idea with your parents conceptually and say, hey, I want a guarantee. Would you be keen? If they're keen, I think it's important that the 4 of you or the 3 of you or the 2 of you, whatever that situation is, you sit down with the mortgage broker and all just have an open conversation on how it works.
Yeah, totally. And look, essentially, avoiding the LMI is a good thing to when it's your own home to live in. But if it's for an investment property, then there's pros and cons of that as well. Not as critical.
Yeah.
But yeah, there may be situations where you don't need to have a guarantor. You might, as I said before, have a cash injection or a loan from your mum or dad that don't need that 50 grand. And it's actually a loan that's going to be beneficial for them for tax purposes or whatever, as opposed to putting a hold over their home.
Yeah, because I know, and again, it just speaks to what your situation is. When I bought my house, my parents offered to go guarantee.
Yeah.
So I didn't have to pay, I think, $15,000 LMI.
Yes.
But I knew that they wanted to move and downsize, and I just didn't want to have to go through that drama. So I made the decision, it was cleaner if I just paid the LMI and the property increased in value. So I didn't really care. But for me, it was worth more to me to pay the $15,000 and not have to get mum and dad in signing documents and stressing and all that. So it can work, and it also might not be appropriate for some people. So
yeah, well, the long and short of it can absolutely fast track someone's entry into the property market, like when you've got something like that up your sleeve. So that's when we think strategically. I've got my 5% of savings. I may be waiting another 12 to 18 months. Hang on a minute. maybe mum and dad can help out. Win-win for both parties, and away we go.
Now, just on that, what if Nan had a property that she owned outright and she wanted to help? Is it still a parental guarantee, or can it just be
Grandma guarantee?
Yeah, like is it worded parental guarantee because most of the time parents do it? Or
Yeah, I think so.
Yeah.
Yeah. No, look, anyone essentially can be guarantor for the property owner.
Yeah, so it's not strictly the bank will only allow parents. It's like they're just loosely called parental guarantee because 98% of the time it is a parent.
Yeah, and they ask more questions if it's not a family member. It's like, why are you doing this sort of thing? Like, and it is common for business owners, isn't it, to go and buy a business and use their own home as their security, basically, which can obviously come unstuck if the business doesn't float.
And I guess before we finish, one other strategy might be if we go back to that $500,000 home, the parents might be able to refi and carve out $100,000 mortgage and gift the money or lend the money over to the children, and they work out a payment schedule over 5 years or something.
Yes.
To pay that back. So then it's technically not a guarantee by like the bank can't walk in and take the parents home. But if little Johnny or little Mary doesn't pay, the parents are still going to be without if the bank sells the property and whatnot. So again, the least risk possible is to buy a home with no mortgage with cash.
Absolutely.
But we don't have that luxury a lot of the time. So the next less risky thing is to put 20% of your own money down.
Yeah.
The next thing, if you don't have that, is to put some of your money down and pay lender's mortgage insurance. Okay, well then there's another option. If you've got someone to guarantee the property, you don't have to pay LMI. So it's this spectrum of risk and complication.
Or home builder, 55 grand worth of incentives, and that can fast track it by about 8 years.
Totally. All right. Thanks for having a listen today, guys. And again, we try and cover, a variety of different topics on this podcast. We want to keep them kind of under 15 minutes so it can just be an encouragement. It can be a powwow.
Yeah.
Just talking property. And if
you've
you've
got
any questions, jump on the Sort Your Money Out website, click click M3 or My Millennial Money. You can send a question through the website.
Cool.
All right. Bye-bye.
Thank you.